Good afternoon. This is Keith Brown in Moultrie, Georgia with Commodity Consulting with some commentary for Tuesday. It's about 2:30 Eastern Time, first day of autumn, if that means anything. So far it doesn't mean anything for the grain except to go lower. But let's get back to cotton. Cotton actually will close a little higher today. December cotton goes out about 62.80, up about 25 points. Of course, yesterday it was decimated with the news out of China that China's imports were going to be drastically cut going into the new crop year. And that certainly overshadowed some of the harsh weather conditions that have been recently occurring in West Texas. We talked to one of our Texas guys yesterday, and he told me he had gotten about 8 inches of rain on his crop. That's southwest of Lubbock, so I think that's a little too much, little too late. But nonetheless, if we can't sell this cotton, then that's going to prove pretty difficult. And looking at the 2015, that looks mighty difficult as well. At 65.30, nobody's going to plant cotton. I say nobody will, but that certainly will be under the cost of production unless inputs come down. So Mother Nature or somebody's going to pull a pretty good rabbit out of the hat for that to happen. Over in the grains today, we were slightly lower in the beans and corn, slightly up in wheat. And wheat may be wanting to flatten out here a little more. When I look at the style of trading in beans and corn, they're really not accelerating lower. It's almost a deacceleration. They're almost trading lower in slow motion, if you will, which says to me we could be wanting to put in some type of momentary low in here and maybe trade back up. I think there'll be some selling on that if that happens, but the market may be a little too exhausted, a little too overexerted to the downside, and it's certainly possible to see corn and beans both rally back a little bit. We would certainly key on that wheat-corn relationship. I think that's something that could possibly watch wheat gain on corn, in that the wheat harvest is long over and corn is yet to enter its harvest. So that's something to think about. The dollar was down today, although overall its trend is up, and so that's usually a death knell for U.S. agricultural exports, and it seems to me that the feeling is that the interest rates are going to rise sooner rather than later, and that would certainly keep the dollar buoyed and put a little crimp on the potential to export U.S. row crops. At any rate, tomorrow's the middle of the week. We'll see what that means, if anything, as we just continue to languish here, knowing that we've got record yields coming, but we need something different to trade. If you have any questions or comments, give us a call, 1-800-910-1910. Thanks for listening.